Imagine the exchange market as a huge marketplace where devices from around the world are exchanged. Just as you have cents for euros and dollars or any other currency, the exchange market has its own unit of measurement for price variation called pips. Pips is the abbreviation for point in percentage, which means point in percentage. It is the smallest possible variation in the price of a currency pair. For most currency pairs, a PIP represents the fourth decimal place of the price. For example, if the USD pair is quoted at 1.11234, a movement of 1 PIP would make it 1.11235 if it is bullish, or 1.11233 for a bearish trend. Except for stock indices. The concept of PIPs is also used for stock indices, but it represents a unit of the index rather than a decimal. We more often talk about index points than pips in this context. What is the importance of pips in trading? 1. Measuring spreads. The spread is the difference between the buying price and the selling price of a pair, the demand and supply. It is usually expressed in pips. A low spread indicates a more liquid currency pair that is easier to trade. 2. Calculating profit or loss. The profit or loss of a trade is calculated based on the number of pips gained or lost. 3. Managing risks. The trader uses tools like stop loss and take profit orders expressed in pips to limit potential risks. In summary, pips are a fundamental unit of measurement in trading that allows for quantifying price variations of financial instruments. I invite you to come to my screen to see exactly how pips are represented on MetaTrader 5 and in other derived indices. Here, we are on MetaTrader 5. I will set it to 1 minute. Here, what do pips represent? Pips are just these movements, the variation. And then, if you look here, the prices go up 6, 5, 6. It is this difference that we call pips. So, for example, if we were at 6, it dropped down to 0. We said it made a movement of 6 pips. So, the pip is these gaps that you see. And this makes it easier to measure stop losses. As I said, I will take a position, for example, of 0.10. If I set the sell, you see these movements here, we talk in terms of pips. And this helps us perhaps to set a take profit text, for example. If I need to set a take profit, I double click here on the take profit. It's the point I mentioned with the indices. We rather call it the derived point, but it's the same thing. It's the pips here. If I set it to 20, you will see that my entry price was 0.1806. And if I set my take profit to 20 pips, you will see the variation. The price will be at 20 pips. So, at 20 price change intervals. And I can also set my stop loss, for example, also at 20 pips. And you will see, as we enter the strategic part, we will talk more in terms of pips, whether to measure our profits or to perform reversal analyses. We will talk in terms of pips, and we can easily measure pips with tools that MetaTrader 5 offers. For example, this tool here for crossing grids. If, for example, I want to know the distance between these prices up to the top, if it's to measure pips, I can simply click and hold. I click, I hold up to here, and then you will see that next to it, it says 65 points. That is to say, the distance there is 65 points. I can also do it with, here was my entry point. When I go down, I see that I am already in profit of 4 pips. And if we go down, take profit is 20 pips. That's what we call pips. I will close this position. So I believe that already in mind, what does it mean? What do pips mean? Because the further we go, the more you will see its usefulness. So, thank you very much for this part, and we will see each other in the next step.